Welcome to Volstars, a Gammastrike production.
Welcome to Volstars, where we talk everything markets and those who make them. Today's episode brought to you by Shahed Aviation Industries, manufactured both at home in Iran and abroad in Russia. When you need drones for war, accept nothing less than a Shahed. These drones are the perfect low-cost, high-collateral damage vehicle for when modern warlords really want to get their kamikaze on. Nobody beats our prices, as our highly efficient manufacturing pipeline utilizes children, teenagers, and human-trafficked female slaves from Africa in active war zones with the lowest cost of living around. Our quality is also unmatched, utilizing only the finest components sourced from Intel, Texas Instruments, Analog Devices, NXP Semiconductors, Microchip Technology, Micron, and Marvel Technology. Aren't we sanctioned? Well, yes, we are. But don't worry, Jensen Huang from NVIDIA definitely hasn't been taking monthly trips to China to figure out how to get around similar sanctions. And finally, by Gammastrike.com, providing actual real-time data for every type of trader. You've tried the rest, now try the best, Gammastrike.com. I'm Jay Fresh, and I'm joined by our co-hosts, Girk and Adork. Let's get into the market overview.
I want to start the episode off with a quick note. The Gammastrike is in no way economically affiliated with the country of Iran or any of its state-sponsored agencies.
Yeah, this is satire. Yeah, we're not sponsored.
Yeah,
by
that was
anybody.
purely satirical, and we are not traitors.
Although,
nor have we committed
Traitors,
any
not
international war crimes.
although the slave thing and the United States technology thing seems pretty accurate from what I could tell online.
That's disturbing.
Yeah. No,
But
they apparently
when
tricked.
When have Intel chips not been shipped into war zones?
Well, they tricked like over 1,000 women from Uganda or something to come to somewhere in Russia, promising them, like education or like service jobs. And they just show up and they're just like, who was the one, which country was basically using slaves to build their FIFA World Cup stuff? Qatar.
All of the Middle East.
Yeah, it was real like, yeah, it was wild reading about some of that stuff. But
yeah, if you're from Cambodia, Laos, or the Philippines, and you're listening to this podcast right now, remember, if you go to UAE to take a job, they will take your passport.
Yeah,
they do similar
if
shit
it
in China
sounds too
too.
good to be true, before you accept the job, look to see when the next World Cup is. And if it's within like 4 years of the date of your job offer in that location, like you're going to be human trafficked to build.
I wonder where the U.S. is
infrastructure.
going to get all of its labor for its upcoming FIFA World Cup.
Minnesota.
ICE facilities? ICE detention centers?
Good old U.S. of A. Sheboygan.
All right. Well,
Kalamazoo.
we're already we started off the day talking a little bit about Iran. I did also want to throw something in at the opening about how Iran is now threatening to cut some of the underwater internet cables to cut off some of the folks that are quote unquote harboring the U.S. military against them. So and I was like, well, I can make a joke about SpaceX in there and Starlink, but it just seemed like too much to kind of throw into one intro. There's already a lot going on, like the human trafficking and U.S. sanctions chips. I figured I'd focus on that.
It was a
I'm
nice
I'm glad you found your muse this week.
Yeah, I had to come up with that idea all by myself. Thanks for nothing, guys.
I tried. I did 2 suggestions.
They were terrible. You clearly don't listen to the intros when I record them ahead of time because I've already done some of those ideas that you said.
I liked mine. Buying
Yours
timeshares
was
on.
good, but I had already started. Yeah,
I know.
I don't know that I want you to waste it. I mean, I guess no one's ever going to talk about that one again, so you could. It was a good one, but I'd already started on the.
I was proposing that we be sponsored by a new timeshares going up in Carg Island.
Mm.
Yeah, an island that we will only talk about for another few weeks, I'm sure, and then nobody will know what it is again.
Well, so far
Everybody who
they've
played
only
Battlefield knows
so
what it
far
is.
they've only destroyed military significant targets, and also Iran's been draining oil from Carg Island since February.
Yeah, but what about the missiles
It's
that we're going to
almost
send
like
just
they
for
knew
fun?
this was coming.
Like we sent the business missiles, but what about the missiles for pleasure?
Hmm.
Because Trump
That's
did say
true. Trump did
hit
say
it a
that he
few more
might
times
just
for
keep
fun.
doing it for fun.
Yeah, because that's what we're all having lots
I
of
didn't know
fun
that
right
the
now.
U.S. taxpayer had fun missiles.
Yeah,
They're all fun missiles because then we have to make more of them.
Yeah, God forbid we had healthcare.
right.
No.
Yeah, I'm glad we're blowing up
All
these
right.
oil refineries, and I'm using paper straws over here.
I wonder how much one Patriot missile costs.
There's
Do we
no way to
know?
know.
I feel like it's got to be disclosed somewhere. I mean, I know the Pentagon doesn't get audited, but
I can see Ron's screen in the picture frame behind him. He's totally grokking this right now.
was he grokking it?
No, I'm just making it up.
3.7
Single
to
missile,
4.1 million.
3.7 to 4.1 million. And how much does what is the annual healthcare cost for one U.S. citizen?
That seems pretty cheap for a missile, honestly.
Mm-hmm. You got an extra 4 million laying around?
I mean, didn't Trump propose like a $500 billion increase to the $1 trillion Pentagon budget?
Approximately $15,000. So just real quick, Ron, if you have a calculator pulled up, can you do the math on the number of people we could insure with each Patriot missile?
You're such. We're gonna get.
He's an
thrown in
anarcho-capitalist, all right. This is
we're
his
gonna get
bread and
thrown in
butter.
jail for being Antifa.
This isn't
Gert.
Antifa. I'm just highlighting the numbers. I'm not selling
This is
morals,
clearly
a moral
financial
standpoint.
terrorism that you're engaging in right now.
Yeah. Why are you making this fake news, Girk?
I'm not. I just wonder how many people could receive health care for each Patriot missile fired.
They're going to cut our
And
broadcast
I'm not even
license.
adding 246 per missile. So let's say 250 with the logistical costs around, getting the missile where it needs to be and paying the crew members of whatever fucking boat it's shot off of. So 250 people could be insured for 1 year for each Patriot missile that we launch at Iran for no reason.
And it's also, you got to think about the missile defense things that we're doing and all that.
And Trump said we've been launching thousands of missiles.
Yeah.
Yeah, didn't they say at this point we're up pretty close to $20 billion already that we've spent?
That's
I don't
enough
know
money
what
to
the
give every
details of
adult in
that math
America
are,
like
but
$1,200.
We'll just print more money, right, guys?
I would rather have the $1,200 than fighting Iran right now. But
what if we
that's just me.
increase tariffs so that poor people pay more taxes?
That's a great idea.
Okay. All right. This is not an
How about a
Antifa
flat
podcast.
tax? Let's go with a flat tax.
What? I didn't say anything about fascism or being. I'm pro-fascism.
You're an anarcho-capitalist, bro. You just want to run the world
I am
yourself,
not.
okay? You just want to be the
Stop
top
trying
marauder.
to make me into
like
an
the human
ANCAP
skull
for your own
crown.
for your own benefit.
I'm going to bring this back around, and I know the perfect way to recaptivate this audience by saying that Girk was right about everything.
What?
Would you like me to elaborate on what you were right about?
I mean, yes, I would.
So 2 weeks ago, our stupid bet was that Iran, sorry, sometimes I say it the old Southern way, Iran would deploy mines in the Strait of Hormuz, and Girk lost that bet because they had deployed mine single without an S, so he lost on a technicality. But 2 days later, it had come out that there were boats trying to litter the Strait of Hormuz with mines, and he would have won the bet if he just had 2 more days. But we'll give it to him posthumously.
No, I'm holding on to that, bro. I'm not giving it up.
Posthumously.
Posthumously?
Sure. Do not make fun of me. All right.
All right.
Well,
everybody clap.
Please clap. Then he was right this week as the winner of the stupid bet. He didn't win the parlay, but he won the bet of will they relax constraints on Russian oil in an attempt to try to get oil price under control. And they pretty much, honestly, they were kind of already talking about it over the weekend, but yeah, they pretty much right away on Monday, Tuesday came out. We're just like, all right, we're gonna do this. And man, I'll tell you, this has been quite a week for Scott Bessent. How do we say his name?
I
Did
saw
we
he
ever
got
figure
called
that?
out of that interview.
Yeah,
Probably because
yeah.
he was blowing up his $50 billion oil short.
Oh yeah, we could get into that.
Yeah, there was a really interesting oil futures trade. Somebody sold 200 200 million barrels of
on WTI,
oil.
right?
Yeah,
Which importantly is cash settled, right?
Yeah, which also immediately before Trump's announcement that the war was going to be over in a few days. And then it wasn't. And it became rapidly apparent that the war is never going to fucking end. And now oil is higher than it was.
Yeah.
Which I don't know if you know about selling barrels of oil, but when you sell them at 86 and then all of a sudden those barrels of oil are 96, you're a little bit underwater.
Yeah. And
those are leveraged. Those are leveraged positions, by the way.
Yeah, I think it's telling that they use the cash settled one to do that very aggressive short. I mean, obviously, there's no proof. I mean, only the SEC knows, and
they're too busy jerking off.
Even exist?
They do. They
I've
exist
heard
to jerk
nothing
off
from the SEC since Gary Gensler left.
They
he'd only been
porn.
there for 4 years.
They watch porn and make fun of meme stonk traders. That's all they do.
Yeah, so the SEC knows, but they're asleep at the wheel, have been for a while.
Actually, hold on. Does the CFTC even report information to the FTC? Because I feel like that would be a national security risk. Pretty sure the CFTC doesn't tell anybody shit, ever.
I was just thinking they could probably go and look up the accounts and back them out, because they know, like, there's like trade information that is anonymized, but
you know what they'd probably do with that information? They'd probably forward it to an enforcement agency, like who would enforce laws in our country?
The DOJ?
No, they don't do that anymore.
The FBI?
Wait, like, hold on. What if you had like a big list of pedophiles? Who would you bring it to be like, hey, can you go arrest these people for banging kids?
The DOJ.
Peter Thiel.
That's still not ringing any bells. Huh.
Yeah, the FBI, right?
No. No.
I feel like there's
my
a joke
local
here
sheriff who's got a bone to pick with the establishment.
Okay. Yeah.
Like the guy from Walking Tall, that guy with the stick.
I feel like my joke got through, but you guys might get it later.
Well, I know what you're saying. You're saying nothing's going to fucking happen about it.
You're going to string us along. You're going to string us along. Yeah. All right. So what can we expect?
I'm saying much like the Fed, the DOJ does nothing.
Yeah.
Well,
much like the SEC.
As long as the Dow's over 50,000.
One
do
more
nothing.
useless
But the Dow
sprinkle
is
on top
under
of our
50,000.
overflowing cornetto of central government.
The Dow is currently under 50,000. So what will the DOJ do to get it back up?
Clearly
Not-
prosecute a few people wearing black at a protest.
Not prosecute Scott Besson for illegally shorting oil.
Well, actually, I mean, price controls would be illegal. So it wouldn't be an illegal short of oil. It'd just be a dumb one.
Well, no, that's an
not
insider
paying-
trade. We
not
don't know who did
settling
it.
their underwater short would be illegal. Who's gonna prosecute them for that?
Should we just wait till the futures expiry and see if the Treasury General account gets drawn down by like a couple billion?
Oh, the ultimate loss porn. God, it would make me so angry seeing that.
Somehow I would doubt that would make it onto that sheet. I feel like this is the perfect, you know, like every time Janet Yellen and other people say
I think
they
you
have
overestimate our
extraordinary,
government.
Are we going to see
they
the
have
Fed buying oil?
extraordinary measures. I feel like there's an
All of a
extraordinary
sudden, the
measure
Fed has
to
like
at
200
least
million barrels of oil on its balance sheet.
Who just printed the oil?
They'll finally be able to prosecute JPOW.
No. They're short the oil, so they have the obligation. They have negative oil.
Well, technically it's cash settled, so they just have negative leverage on oil.
Yeah, it would just be negative money. Yeah. Anyway, okay. So we've got oil futures are going to open up here at the time of this recording in about an hour. So we will keep an eye on that, and we'll probably stop our discussion to ooh and ah at it. What do we think is going to happen this week? I know none of us are experts in Iran, but stocks, oil.
Well, we did have some news over the weekend. There's going to be, a release of oil from reserves, like around 450 million barrels. And
That's total for all of G7s, right?
Yeah, well, I think it's pretty much.
Because the U.S. is 170, which just for context, I think back when Biden started selling it, we had something like 600 million, 600,000 million, 600 million barrels of oil. We sold that down to like 270.
I know about 200 million or 170 million is coming from the Americas.
All of the Americas, so not just the U.S. Because we've only since Biden emptied a lot of the oil reserves here, we've only refilled about 45 billion. So like when oil was at 60, we only bought like 45 million. I don't know how many I said barrels of oil, and yeah, now we're gonna release 170. So it's like okay, we're going the wrong direction, guys.
So we're going the wrong direction. And it's a lot. I want to note that a lot of this oil release is, first of all, I think the US and Europe aren't set to release any of these reserves until March. Asian countries participating are releasing reserves available immediately, but the amount of reserves they're releasing are significantly lower. I think somewhere around like 50 million barrels or something like that, last I heard. And so that'll be available immediately, which will cool prices a bit. However, waiting till end of March for the rest could see like some price volatility in between then. I don't know if that's enough to offset a potential 30% loss in total global production. Especially as we start to see more and more infrastructure strikes. I know Ukraine struck a refining facility in Russia over the weekend. Iran continues to strike regional oil infrastructure, some of which none of this stuff can be rebuilt quickly. So, the release of reserves is a bandage, but we're going to need a long-term solution as these strikes on oil infrastructure in the Middle East continue. Iran is going to continue to release drones. They're going to continue to attack significant oil infrastructure in any country harboring the U.S. military. And that's going to, put those countries in a position where they're either actively trying to rebuild infrastructure constantly in order to offset the damage being done by drone attacks, or they're going to push the US off of their territory, which forces the US to fight a strictly naval battle or to put boots on the ground in Iran. Which obviously, the Republican Party it's something that they would want to avoid, especially with midterm elections coming up. I think boots on the ground in Iran is probably the worst fucking possible scenario for them.
I
And
don't know,
so
man. Lindsey Graham is ready to blow them all.
Lindsey Graham's face looks like the front of a dildo.
Oh, all right.
It's very smooth, like it's made out of polyurethane, or I don't know what it is, but it's like folded and dour, but
Looks kind of like a vas deferens, right?
yeah, like fleshy and
Jesus.
smooth. Not a vas deferens. That's not the
No,
vas
no. So
deferens
what's
is
it called?
inside your penis.
Yeah, what's the thing called? The
crown? I don't know.
the underpiece. Ron, get on that.
Ron
Get
could
on to
probably
Google,
find us.
Rod.
What's the exact word? The glands.
No, that's just the whole mushroom cap.
It's the
the underside of the glands, the sub-anterior glands.
Ron, we can't move on. We can't talk about macro conditions until you search for this on your Google account.
It used to be part of my vernacular back when JFresh and I were initially breaching the firewalls of Microsoft Bing image generator. Frenulum.
Yeah, dude,
It's the frenulum.
Frenulum.
He looks like a frenulum.
There you go.
Jesus Christ.
Wait, wasn't that a character in Star Trek? Like a race?
The frenulum.
I'm not even going to tell you.
Wait, hold on. No. That was the
name.
production company that made all those like television shows in the 90s or early 2000s. Frenulon. Remember?
Fremulon.
Like it would like.
Oh God.
I'm gonna look this up.
God damn it.
All right, we've gone completely off the rails. Do we have anything else we want to say about Iran and the oil surge? I will say it does seem like
Fremulon was an American television production company founded in April 2008 by writer and producer Michael Schur, Parks and Recreation, Brooklyn Nine-Nine, and The Good Place.
So he just took frenulum and switched 2 letters around and called it a day?
Yeah, and then not only that, but Nick Offerman is the one who does the voiceover for the end credit, where they say Fremulon or Fremulon.
Weird.
Yeah.
This is the Mandela effect here. We gotta back out of this before I start falling all the way down the rabbit hole here on this frenulum topic.
Yeah, only on
do we want to talk about
all
all the other bad news from last week, like personal consumption expenditure hitting 3.1% year over year?
We're going to get to that when we get to calendar.
You want to do that at the calendar phase? Okay.
Yes. So one thing I do want to say about the oil events that are unfolding, there's a lot of narrative around, hey, we're going to sell all of this oil to keep prices under control. But the best way to get prices under control is, instead of just talking about how much oil you're going to sell, you just sell the oil at market. And so I think there is still a big question mark about, you mentioned 30% of the world's oil supply being either the infrastructure being destroyed or being very stunted for quite a while. Oil is a rate balance, right? You have to get the oil to market continuously because we are continuously consuming all of this oil. And so it's not a matter of like how much are you going to sell, but at what rate can you provide it to the market, and for how long and how consistently can you provide that rate? And that is where I really don't know the answer. I'm not expert there. But I think we're going to be straining the world's ability to see how quickly can they get this oil to market, and how seamless could they actually make it? Because I don't. Not only is it not enough oil to last for very long, but I don't know that they could actually replace the rate that has been lost.
No, no, no. Production, I mean, shipping globally is going to be hitting a brick wall here, and we know what happens when we get supply crunches in shipping. And then yeah, how do you reinstate the logistics required to move all of this oil out of reserves? And it's not going to be as simple as, one, two, three, and the oil just magically fucking appears where it needs to be. Not to mention, 28% of the release is like oil products, and 72% of it is just fucking crude. So it still needs to get somewhere, be refined, turned into an oil byproduct, and then used in manufacturing or transportation, what have you. So I mean, this it's not like we're just releasing. Everyone always thinks about oil as just being like, oh, well, we're releasing crude, so that's just the same as the gas I put in my car, and it's not. There's a whole nother layer of logistics and refinement that needs to go on in order to get this oil to market. So this release doesn't really, it's not going to be like an immediate impact. It's going to be a slow kind of, almost like the Fed put, like, just something backing oil markets a little bit over the next few months. But it's not going to be, just all at once everything's perfect again. And
Yeah.
even if there's a shock due to the announcement to oil markets are still going to be being driven higher over time by the war in Iran, and this kind of persistent action where we're seeing infrastructure destroyed on a fairly wide scale.
Yeah, so I think if anything, it might help a little bit with volatility, just trying to tamp down rampant speculation. But at the end of the day, yeah, I mean, people still have to buy and use the oil, and they're going to have to pay market rate, right? And if supply goes down and demand stays high, then yeah, prices go up. There's no way around that.
Yeah, I think that
Um,
I think that Iran's plan definitely is to try to outlast this and have everybody completely drained of their reserves. Because as soon as they have that, right? I mean, they have the globe
yeah,
by the
it's a waiting
balls.
game, right? Only President Donald Trump has successfully won the same war 7 times in the last 10 days.
That's correct.
That is a feat that has never been replicated.
Yeah, now he's just bombing Iran for fun.
Yeah. So yeah, all Iran has to do is just wait, and eventually, right, that's the pain part of it. I wonder too, I think of like, I don't want to call them the axis of evil, but sort of the modern day axis of evil, North Korea, Russia, China, Iran, um, obviously a lot of the ties that they have to resources and things to get around sanctions are coming from China and coming from Iran. And China has, done a fair amount of empire building of their own around the world, and the Middle East is definitely an area of interest. And I wonder too, because this is so obviously, as all wars are, this is an economic battle. Um, I do wonder if this accelerates anything on the Taiwanese front anytime soon.
I'm pretty sure there were reports of a bunch of Chinese ships getting around there.
I feel like there's always reports of Chinese ships kind of screwing around over there. But I wonder if, I mean, I would imagine we're not close to that yet, but I could definitely see them pulling that lever if things start to get uncomfortable for other reasons, because that would be a way to dramatically upend a lot of our economic endeavors right now, right? So many people are so levered into the continual flow of chips from Taiwan to the US.
Well, people, that's everything we use. Once again, we're going to come back to that. Everyone uses computers and all kinds of silicon and shit, and a lot of it comes from
Yeah,
Taiwan.
even
A lot of it comes
Iran.
from China. Iran too. Yeah.
That was a list taken from decent primary sources, I thought, of
Okay.
things people have found in like the wreckages of Iranian drones and stuff.
Interesting.
All right. So let's shift from Iran and oil specifically in talking about how this oil price is challenging the value of the yen that is now, as time of this recording, pushing pretty close to the USD JPY is getting pretty close to $160, which is
Yeah, it
the
is.
kind of the line in the sand that has sort of been drawn in the past of like, here's where we're super serial. This time we're gonna do something about it. We're fine. You know, our citizens have already been kind of starving and are having trouble paying for rice, but you know, if you don't watch out, we're gonna embarrass you guys a little bit and strengthen our currency so that maybe our people don't starve quite as much as they are. Are they gonna do anything?
I mean, I would, yes. I mean, I think intervention is almost absolutely necessary. We've seen 160 USD JPY, like USD to JPY being kind of like you said, the line in the sand where Japan really needs to act. It's not just a psychological barrier; it's really just their intervention zone. And so um, this is an action undertaken by the Ministry of Finance in Japan, and usually they artificially buy yen in order to punish short sellers. And this can cause, obviously, like, the more shorts there are, the more chance of a short squeeze on the yen occurring, because of leverage dynamics. I know recent data showed on the COT, or the commitment of traders for FX positioning, that net short positions plunged from like negative 16.6 thousand contracts down to negative 41.4 thousand contracts with the announcement of the war in Iran. Because obviously, oil is denominated in dollars, oil up, dollar up, right? And then dollar up, yen down. And so people were piling into that trade really, really hard, which means there's a very significant short yen position placed on right now. And so if the Bank of Japan, at I do want to note, just a couple months ago, had already been in discussions to do kind of a multilateral version of this s- intervention with the Fed. There had been reports from the New York Fed that they were also looking at intervening into the yen. And so if we did get something like that, where you get both, the Fed and Japan piling into the yen simultaneously, you could trigger a very large short squeeze. And that's just like the near term mechanics of what could happen with this. I mean, there's bigger, more systemic problems with the carry trade. I think I showed you guys earlier a chartment from the BIS's most recent report on interbank leverage and FX swaps. Those are really the linchpin of, these banking and non-bank financial institutions that are carrying these massive, basis carry trade positions. And right now, you've got about $80 trillion of that debt expiring within 1 year by maturity. So, say this Bank of Japan slash Fed intervention were to blow up, you're talking about 16.6, $80 trillion at the yen's current rate would be, I guess that's about 12.76 quadrillion in yen that would need to be repurchased.
Yeah, that's kind of crazy. And I think it's so telling. I want to read to you guys something that the Japanese finance minister Satsuki Katayama said on Friday. This was reported by Reuters. She says, in response to these sharp market swings, particularly those driven by surging oil prices, the government stands ready to act at any time, mindful of the impact currency moves may have on people's livelihoods. And she goes on to say, in any case, we are maintaining extremely close communication with U.S. authorities, even more closely than usual. I think it's always telling. I mean, I know the U.S. is kind of the dollar is the currency
Reserve
of
currency, yeah.
exchange, yeah, but I just think it's so telling that it's always they have to work in very close collaboration with this other government to secure the value of their own currency. I think because it's sort of an unsaid thing that, hey, this is a dynamic that is very large and very powerful, and nobody wants to talk about it, and we wanna all pretend it's not there.
So this is something funny. This is something that like I hearken back to whenever I have discussions with, armchair economists on the yen carry trade and its significance in financial markets. And they're always like, those things are hedged, bro. We're all good, bro. And then at the same time, you've got Japan just and the US basically like having to sit down at a table every time that Japan wants to make a change on interest rates or try to deal with their currency spiraling out of control. It's like, yeah, yeah, it can't be both, right? It can't be okay, bro, and at the same time, we gotta have all these discussions and try to do a bilateral
Yeah.
thing, otherwise
I
everything's gonna
mean
fall
I
apart.
mean, anybody that tells you that hedging global FX swaps is a binary action is a fucking idiot. I mean,
Yeah.
this is not like some, like, fucking perfectly contained trade that we're, just like, "Oh, if it goes down, we're okay over here." This is you're
Wait,
talking
no, Kurt.
literally trillions of dollars of leverage. Trillions of dollars of leverage trades, quadrillions of yen, right? I mean, the size of this trade alone it makes shocks so impactful that there is no mechanism by which to perfectly hedge it.
It's kinda
I
like
mean,
options.
yeah, I mean, think about your options and like imagine trying to hedge, a spike in VIX to 100 perfectly.
Oh, yeah, we don't do spikes very well in hedging. You need nice smooth functions.
Yeah,
Yeah.
even just trying to
So,
hedge delta.
it's so I want to use this opportunity, like I always do, to just talk about how wildly important this trade is. It is the linchpin. It is the financial gravitational center of everything we know in portfolio construction. Is that rates in Japan are 0 on their 10-year bond, right? And, like, that is no longer true. I mean, the Japanese 10-year bond right now is at 2.25, and if you think about that, remember that these are currency-denominated hedges that all these insurers and, life insurance companies and every pensions are carrying. All of a sudden, the Japanese yen at 150 or 160 to a US dollar, and their rates almost at par with the US 10-year yields. I mean, you can look at the spread between them is like fucking nothing right now. Um, Almost as low as it was in 2020 when the carry trade cracked a little. Um, this is like an economic meltdown waiting to happen. not only through possible market shocks, but just structurally, you are talking about the yield on currency hedged bonds just being better on Japanese bonds. It is just better. So you're talking about repatriation of like what, $12 trillion in assets to Japan? And what do you think that's going to do to US yields? What do you think that's going to do to the US dollar?
It's going to make rates go
If
to
I just
zero.
imagine 4 times the amount of money or 3 times the amount of money we printed during COVID, just going over to Japan. Because
Yeah.
that's the best value. Like, do you think the whole world is just going to fucking ignore positive yield? No, they're not. So if the BOJ and the Fed and everybody intervening to keep the yen from crashing doesn't squeeze out this carry, then it will just mechanically happen because it is the path of least resistance for portfolio management. And
but the rate matters, right? I mean, the violence of an
sure, but
unwind.
you have the Japanese 10-year trading at 2.25 on its yield versus the BOJ's rate at 0.75. So the bond market's already telling the BOJ your rate's wrong. Fuck you, your rate's wrong, right? They're saying it like really loudly. And so, and all of these banks are holding this fucking debt, and like non-bank financial firms, and they're not reporting any of this shit. There's a massive maturity mismatch, right? 80 trillion of $111 billion or trillion dollars in FX leverage is in 1 year maturity. And like, it's just, it has to, like, I don't know how to put this more, it has to crack. There's no route. There's no saving it. There's nothing the Fed can do. There's nothing anybody can do. I will say that Japanese banks will make a fuck ton of money.
Kirk, I do want to say,
I wonder if that's why Warren
amend...
Buffett bought all those Japanese financial firm stock.
I knew you were going to go there. We've known each other for too long. I know all of your. I want to amend something I said earlier. Earlier, I described you as being potentially a member of Antifa. I'm going to retract that and say I think you might be a panicking. And according to my Twitter feed, no panicins allowed in the United States.
Trump has, honestly, the thing is, Trump has nothing to fucking do with this. He doesn't have any control over it. He has nothing to do with it. It's so far removed from anything,
honestly, like
any central bank can control.
I will say, I'll give Trump this. I've said for a long time, it's always been really frustrating to see like presidential candidates come out and say all that they're going to do about the price of oil when they don't have a ton of control over the global price of oil. But Trump found a way to have control over the price of oil. It's just going the wrong way. But he found a way to raise it a lot.
Did we already? So I have to imagine a lot of this discussion kind of went straight over the head of some of our viewers. Did we cover the carry trade a bit in one of our prior Volstars podcasts?
Yeah, extensively. I've talked about it so many times.
Okay, yeah. Ron, make sure that we have a link to that podcast in the description for this one, just so that way people can jump back over there and listen to Gert go full panicking on the carry trade.
I also have like a ton of like BOJ shit on my Twitter that I wrote up like 2 years ago, when this all started becoming really obvious. 2-3 years ago. Jesus, this has been so long.
I mean, we've been
Yeah, I mean,
freaking out about this for longer than that.
well, there's
Yeah, I
plenty of
know.
stuff. There's plenty of and Ron put all that stuff up. But I mean, the basic idea is pretty simple. It doesn't have to be more complicated than there's a spread between the U.S. and the Japan 10-year yield, and you can
and an
make that.
appetite for treasuries in Japan as
You
well.
can make that. You can make that spread by selling yen, buying the dollar, and then buying U.S. bonds, right, and shorting Japanese bonds, right?
I mean, it's just it's just modern banking. It's the fundamental model of modern banking, right? You borrow money at short-term rates and you lend it at long-term rates, and that's your margin. That's how you make
Yeah.
money. So, I mean, if you can borrow money for less and lend it
That's
for
what
more, that's exactly what you're going to do with all of your fucking money. All of
Yeah.
it. Every fucking penny of American depositors' money is being used to borrow yen and then leveraged to lend long in dollars.
and this is
Because
why
it is
I said mortgage rates were
that's the
so competitive
best.
still. Yeah.
I mean, sure, yeah. In the event of global financial absolute meltdown, then yeah, your mortgage rate's fine. I mean, maybe your
Well, no,
bank
I
will
mean,
just go belly up and no one will want to buy the debt and you get even luckier.
well, my
Free
underwriter is
mortgage.
JP Morgan.
Free
Well,
house.
I think this is probably a decent time to talk a little bit about spreads.
What's your house
here
worth
in
if
the
the dollar
US.
goes to zero, Dork?
Infinity.
Nice. That's true. Our houses will be worth the same. That's
Yeah.
crazy.
Look at
I have
us.
a pool. That's not fair.
Yours is infinity plus pool. Okay.
This is the part of the podcast where I speak to the two people that like the nerd talk and say that there are different sizes of infinity. Some infinities are larger than other infinities. Go look it up. That's a rabbit
Refresh
hole.
always has to have the largest
Isn't
infinity.
infinity math for I gave up counting a while ago?
Yes.
That's what I thought.
And
ran
so
out of
some
paper.
infinities can be larger than other infinities.
Of
Yeah.
course, because some people want to count for longer.
And well, some infinities are
Right, but
countable,
if you-
some aren't.
It
Yeah.
reminds me of the
Anyway.
Lamb Chop sing-along song that never ends.
This infinity is a little bit larger than that infinity. That's the worst song of all time. All right.
Yeah.
So let's talk a little bit about spreads here in the US, because I mean, one of the reasons I think that rates can be as low as they are and money creation and credit creation has been as prolific as it has been in the US despite the rise in rates. I mean, we're still creating basically $1 trillion in new money every year from the issuance of credit. I think a big part of that is fueled by the fact that there is this carry trade, right? There's this spread that you can get overseas that is quite large, right? A few percentage points, which isn't not right. It's getting smaller by the day or by the month. But as this risk grows and the low hanging fruit shrivels a little bit, we should start seeing some weakness in rates here in the United States. Not only just the actual rates on AAA stuff, but the spreads between that and junk and sub AAA. So, and Dork has this little graph that he likes to show us every once in a while, which we have lovingly coined the Bamalama Ding Dong. Dork, do you want to go through a little bit about what's going on in rates in the US?
Sure. So, yeah, the Bamalama Ding Dong chart. I've added a supplementary line for the USD JPY into the chart, but basically all it is just the difference between, you have a green line that is your middling credit triple B, the difference between that and your high quality triple A. And then you have the red line, which is the difference between your dog shit, high yield bullshit stuff that, only degenerates buy compared to triple A. And so the whole idea is it just gives you a really rough, like mile high view of sort of the relative cost of, credit for these varying, sizes of or qualities of organizations. So you look at these spreads and, generally you can easily see kind of like in periods of crisis, these spreads go crazy high. The reason being that, everyone's fucked, right? And so the cost of credit is just really high, but AAA guys, slightly less chance of being fucked. So they're way cheaper. And I mean, I'm sure a lot of you guys get this, especially because you've all had a credit score and you've all bought a car or something or gotten a credit card and you've seen what your interest rate is. Same thing, just with businesses and aggregated. So something that's been happening recently that's been interesting is from the second half of 2025 onward, there was this precipitous drop in triple A, triple B credit spreads. What this means is that the relative cost of credit for pretty good companies and really good companies has gotten to record lows. And at the same time, your dog shit credit, really, relatively speaking, has actually gotten a little bit more expensive. So there's a few reasons why that could happen, right? And it's kind of like good reason, bad reason kind of thing. So if AAA, triple B spreads shrink, it could be because triple B, rates are going down, right? It's costing less for those guys because they're just doing so great. Their credit quality is going up. That's a great thing because it means triple B is pretty dang good. Or it could be going that spread could be shrinking for the bad reasons. And that's if you have your triple A companies are actually starting to get a little bit shaky. And so you'll see the spread start to tighten for that reason as well. Generally, when you see these spreads widen, it's usually always for the bad reasons. So that's just kind of a mile high view, and you can see recently, you can see the high yield triple A spread has been rising throughout the second half of 2025 into the first half of 2026 with a little bump in there. That just kind of tells you that the whole. I think we're getting rid of the notion of the K-shaped economy and just calling it the equal sign economy or something. I don't know. I think that's just a direct sort of correlation there that especially with where financing is going these days with the big AI push. Um, I think that this is just illustrating that where people are more reticent to lend to companies that are not gigantic multi-billion dollar hyperscalers and are more willing to lend to those guys that are. And even so, though, we're starting to see cracks form in that space as well. But mostly in the swaps, like the CDS cost and not necessarily the spreads themselves. So yeah, that's pretty much the mile high view. And I threw USD JPY on there because there's interesting bits of correlation at certain points. I would say they're almost spurious. So take from that what you will. I just thought that it would be interesting to look at all that together and kind of helps you wrap your head around sort of how USD JPY credit spreads and those sorts of like you could throw USD JPY in front of yields and all kinds of things, and it just shows how interconnected it all is.
Yeah, I think it is notable to say at least that dog shit grade stuff, the spreads are as high as they were since Liberation Day, right? And they are quite elevated. It's still not quite at 2022 levels when everybody had to reshuffle around and everybody kind of got into massively into the yen carry trade as that spread widened. But it's just interesting as that spread has closed. Nobody's getting out of the yen carry trade. It's almost like an act of desperation. They're just levering it harder, which is not super reassuring, but yeah, so hopefully we'll get that up on the YouTube version so people can poke around on that because I think there's a lot of interesting stuff to noodle on. Again, yeah, I don't know how spurious or how robust these correlations are or how causal they are, but it's just interesting to look at those. So, all
Yeah.
right, so we've talked a ton about banks and the big boys. What about the consumer? How have they responded to all of this going on in the Iran war? Somebody help me out here. Well, I think Girk, you wanted to talk a little bit about them, and I told you we'll wait till calendar, but let's.
We're getting there.
Well, I mean, I guess the big thing is that, or the big thing that we got from last week was that the Fed's favorite metric of core PCE is sitting at 3.1%, which, if you guys don't know, is greater than the Fed's target of 2%.
Transitory.
Over
Sorry, we
time.
can't use that word anymore.
And this is a reading from the prior month. This is still not factoring in the recent surge in oil prices, which are going to transmit into the cost of literally everything. And then we got a real sluggish GDP at 0.7%, which is a fairly significant drop.
Wait a
what we're
minute. Really
expecting to
high
see.
prices and really low GDP. Were all those productivity numbers bullshit?
What animal would you say? Well, yes, and I might have outlined that on my Twitter. Right again. How do I keep doing it, man?
That's a hat trick.
I know.
You already hit one hat trick in one episode. All right.
I thought it was what's it called in bowling?
Jay Fresh, if I put my hands
Turkey?
by my head like this, what kind of animal do I look like?
A moose.
What do you
It's
call
funny
it when you go
because
to
I
a
know.
bar by yourself?
What do you call a financial moose?
A stag.
There you go.
And if people are wondering what the hell is a financial moose, I already knew the real answer to the question before. The financial moose isn't anything. Stagflation. Sure.
Yeah, that's it's kind of what it's tasting like. It's kind of what it's smelling like, and everyone's starting to talk about it. But you know who's not allowed to say that word? J-Pow.
There's only one.
He hasn't seen the stag or the deflation.
I feel like I was.
Now
really,
he sees pressures from both sides of the equation. That's how he says it.
He's getting a little bit from the front and from the back.
Description used in financial markets.
Bull.
Wait.
No, bulls aren't a ruminant mammal.
I guess they're not. I don't know. What the fuck do you mean by ruminant, dude?
Wait.
I'm not a fucking
Yes,
biologist like you.
Like deer, elk, wapiti, caribou.
Cows are ruminants.
Are they?
Hold on, let me ruminate on this some more.
Are they member of Cervidae?
My wife's a veterinarian. Have you ever seen a cow with a viewing port installed on the side so you can watch it ruminate?
Yeah, I've seen that.
Those are weird. Some of them have a glove installed so you can put your hand inside and like feel the ruminant. It's wild.
Do you ever do you put like little balls in there to help them out? Or is that dinosaurs? That's dinosaurs.
I don't know. The glove is sealed. You don't want to be able to actually you don't want to actually pass mass through the hole. That's not good.
Speak for yourself. I could go for some cud.
Yeah? You want it just installed in your third stomach?
Maybe. Don't tell everyone I have multiple stomachs. That was private.
Okay. All right. So how do you think that the consumer is going to react to the war? Do you think how much time do you think it's going to take for the price at the pump to start changing people's spending behaviors?
Ooh, yeah. Let me pull
Hasn't
up the chart.
Oh, Dork has a chart?
I'm gonna find it really quick. Just 5 more seconds. Okay, yeah. So here, I got this chart from Gas Buddy. I'm gonna throw that there so you guys can check it out.
What a ridiculous chart.
So I think that it's probably gonna start happening fucking tomorrow.
I don't know. I only had to fill up my tank once so far since all of this started. I filled up at 288.
Okay, yeah. Well, now next time you fill up, you're gonna barf in your mouth a little bit.
We'll see. We'll see
So
what
that
Costco does to me if they can shield me from some of this volatility.
So for the listeners who can't see this chart, this is a chart from Gas Buddy. It's the 18-month average retail price chart, and it shows the average gas price in America going from Like it looks like 7 days ago, about $2.90 a gallon, up to, as of the 15th, $3.70 a gallon. That's about a 25% increase in your gas costs. Is that my math right? Something like that. Maybe even more. Like 30% almost. So more than 30%. Shit. Something like that. I don't know. I
Yeah.
can't do math.
What do you think is going to happen when you have prices for things like healthcare and gas and stuff that everybody has to consume?
Don't forget heating oil also, that's delivered to 5 million Americans throughout the winter, especially in the Northeast. Heating oil is what, about $5 a gallon now? Up from
I don't
like
know. I don't think
2
I've ever
something?
purchased a gallon of heating oil in my entire life.
I had to buy it once. It was weird.
That is weird. I
It
didn't
was.
think that. Yeah, it sounds like something that people that are trying to get off the grid have to figure out how to buy, and then they have to
No,
buy
it's
it
like
through
all of New England, I think, and like upstate New York. Well, a bunch of upstate New York. But the
I've been to
Northeast
upstate
is
New York
just the
before.
Northeast has just tons of areas that are like heating oil dependent.
Just get him back onto blubber.
It's far
Yeah,
less
man.
common in the South and the West coast.
Yeah, we're all
where-
on natural gas down
Yeah.
here, and we'll even use heat pumps now.
Don't worry,
'cause,
Or
the
you know-
propane.
price of that's going up too.
Oh, I'm sure.
What? Oh, and should we talk about fertilizer?
I'd rather not,
No.
but yeah.
Or
Because
well,
potash,
you know,
right? Potash costs
Yep.
are going to rocket.
do you know what else comes through the Strait of Hormuz?
What?
Most of the world's supply of potash.
Oh,
You know what we need that for?
that's fun.
Growing food.
Fertilizer? I thought we
Food.
already just did this.
All of our food. So our food costs are also going to go up.
Not only because of the cost of logistics, but the input cost of fertilization. It's like
All
you
right,
got two
so-
things.
Two things on either end of you
Yeah.
going.
You're getting spit roasted at the
you
grocery
can't.
store
I
cashier.
I just alluded to spit roasting in terms of the dual mandate for
Yeah, but that was
J-Power.
done. This
A
is
little bit
better.
from the front, a little bit from the back.
You're just jealous that our spit roast joke was better than yours.
We're just getting spit roasted all over the place.
You just spit roasted my spit roast joke.
Yeah, actually.
Oh fuck! Yeah, no, it's not.
I
I mean,
feel
like,
like I just.
This
I
is
feel
the
like I just
moment
got
we
a
need Jay
swirly.
Fresh's face.
I feel like I just got a
seriously.
swirly live on television.
Thanks for the lunch money, bitch.
Okay, so I'm gonna make a few dots here, and I want to see if we can connect them here live. We'll do it live. Fuck it.
Fucking
So
thing
we
sucks.
have price of everything. It depends on oil, which is going up. So
Mhm.
it's all going up. We have had zero job growth in the last year and potentially longer than that. We're still waiting on some of the final revisions.
Mhm.
Last 2
In the
years.
last, and yeah, I would say the last 2 years, but we're still waiting on some of that data to verify. But and the last GDP print was basically flat. Is that good?
Those
I
are the
don't think so.
strongest financial conditions you could possibly describe.
Sure.
So what you're saying is zero growth, zero employment, and everything's more money.
I also saw an article, or no, actually, it was a shitpost tweet from Polymarket. So I have no idea if this is true because it's Polymarket.
Yeah.
Saying that 401k early withdrawals that come with penalties, etc., are at their highest rates ever.
That
Again,
sounds.
the
That
source
sounds.
is a shitpost from Polymarket.
Wait, hold
Well,
on. Is
wait.
everybody
sounds
in America
provocative.
drawing down their 401ks good for the economy? Oh, is it good for risk assets? Let's just focus on the thing people give a shit about.
Well, so if it is
NVIDIA.
good for them, then why
Yeah.
did Blackstone limit their withdrawals and all those other private equity places have to start limiting withdrawals?
What if all those like private equity firms and non-bank financial institutions and banks just, what if they took all of the money that their investors and their depositors gave them, right? And then they risked it, and then they leveraged that risk, and then they were like, "Oh wait, you can't come get your money because we lost it."
You know, one of my favorite things to have happen to my money is I give it to somebody else and then they just piss it all away. Makes me feel really good about what I just did.
Yeah, yeah, same.
Hmm.
That's how I feel about paying for services.
It's true. Yeah.
You just reminded me I got to figure out why my washing machine is leaking again.
Ooh, are you going to disassemble it all on your own and then tell us about it for weeks?
Yes. Just like
Awesome.
last time.
I can't wait for the
Perfect.
2-hour segment on Volstars where we talk about Jay Fresh's washing machine. It's gonna be great.
Yeah. Well, they've made like we're going to talk about it right now. I even looked at like, fuck it, I'll just cut my losses. I don't want to get back under this fucking thing again. I'll just buy a new one. But I know in
Is
my
it a
heart of
Speed Queen?
hearts,
You're a speed queen,
it's
Dirk.
an LG front loader. And I
Oh,
remember I think I spent like $1,600 on it when I first got it. And I was looking around today and they're still selling basically the same exact washing machine because they have actually perfected the washing machine.
have they?
We've finally gotten to
Yours
the point
keeps
where the washing
breaking,
machine.
and my $300 Samsung washing machine has never broken in the same time.
Wait,
Well, front loaders are finicky. Is yours front loaded or top load?
Top.
Yeah, the top loaders are better for that reason. I think it's just a bad
guys, I know this is really
gasket.
I know this is a
Wait,
really
aren't
captivating
front
conversation, but
loaders not actually like horizontally mounted though? Aren't they like that?
No, I mean they're maybe a little bit skewed, but definitely not that much. But it's anyway.
can we okay, so we got 4 minutes till oil futures opens. Can we get through earnings before that? Take a commercial break, watch oil and jerk off and then come back?
Wait, should we call the price of oil?
Uh
I'm going to say it's going to open at $92.
Okay, fine. That's fine. Well, let's call the price of
92.01.
oil, and then we'll get through earnings, and then we'll
You
take a
bitch.
break, and then we'll goon over it.
Yeah,
All right.
let's hit earnings.
Price of oil. Are we talking Brent? Or are we talking CL? What are we talking here?
CL.
What was it at close? Because I've been watching
98.71.
Brent lately. Where's my oil shit?
I think it either opens at
98.71 with-
92 or 113.
I'm gonna say it's gonna open at 90. I'm gonna say it opens at 100.
Okay.
Nothing ever happens.
Chud fresh. Love it. Well,
All right. Earnings. This week sucks, so we can go through it really quick.
Micron.
General Mills, Micron,
Oh, right.
Five Below, FedEx. FedEx might be interesting. They may have something to say.
FedEx is always interesting.
Yeah. Scholastic. Everyone loves Scholastic.
That's where that's where I get my book fair books.
Yeah, me too.
I'm actually kind of interested in Getty Images because they've got some weird shit going on.
Did they sue OpenAI?
AI world? No. They're selling selling their images to these people like contractually. So it'd be interesting to see how well they're doing from that regard.
Yeah.
Bit
Fufu, of course, if you like getting into Bitcoin mining, but you just want to pay someone else to mine it for you and take a little bit off the top. So basically, you're just subsidizing.
You have to
mining.
pay somebody else. You can't make any money competing on that anymore.
You can do lottery miners and hope that you just nail the key.
General Mills could be maybe like a bellwether.
Yeah, I think FedEx now, General Mills maybe later.
General Mills sells like all the name brand versions of the things that when people go broke, they start buying the store brand.
Yeah. Well, FedEx
Well, then,
just
I
does
mean,
Like you
commerce.
stop eating
Williams
Cheerios.
Sonoma is
Oh yeah, well,
the kitchen equivalent of that dynamic.
I feel like that's less broad than General Mills, but yeah, sure.
smaller.
Smaller, definitely a smaller footprint. And more
We
sectoral.
also got Lululemon for the more discerning customers.
Yeah, I wonder if people are gonna stop eating Cheerios and start eating toasted oats.
Ooh.
Have you ever
Or
the
Honey
off-brand
Smacks.
stuff doesn't taste right. It doesn't. I've
That's
tried it
just, it's got
multiple
less
times, and every
sugar in it.
time
That's all.
I'm just like, this was a massive mistake.
It's got like 2 grams less added sugar.
Yeah.
Otherwise, it's the exact same product because General Mills makes both.
Well, shit.
I mean, what is there to say though about Micron? Micron's gonna look amazing.
Have they sold
until they
more?
don't.
Well, actually, no, this is interesting. Have they sold more RAM when costs are, 500% higher than they were? Or
They're selling everything they
have
have.
the sales of their RAM ceased and NVIDIA is
Oh.
not actually selling any chips?
JFresh won.
One what? Oh, oil
Oil
futures?
price.
What did it open at? Oh, 102? Right in
Yeah.
between. Damn it.
Get
It was
wrecked.
really hit or miss with the announcement of
Nothing
the
ever
reserve release.
happens.
No, something happened, actually. Oil's,
Well, it went up a little bit.
A cool 2%.
since December, oil is now up 85%, which represents a let's see, 1.7% drop in GDP globally,
Fake news.
and like 3% inflation.
Fake news. Can't believe how fake this news
this
is.
is all fake news.
Yeah. Can't believe you, Girk.
Yeah. What?
Hmm?
But that was from Jamie Dimon. Jamie Dimon said that, not me. Jamie Dimon said for every
Jamie
10%,
Dimon's getting a one-way ticket to Alligator Alcatraz for that.
for every 10%.
Jamie Dimon is a pannequin and a
Oh.
perma-bear. We already established this.
Yeah. He's called 15 of the last 0 recessions. Or whatever people say on Twitter.
He's also had JPM stay long 15 of the last 1 bull market.
Yeah. See? Fake news.
No, we are
All right,
actually in a recession, though. Let's be real.
Yeah, but
We've been in one
do
for
we
quite
want
some
to do we
time.
want to take a break and then hit the calendar, or do we want to go through the calendar?
Break.
I feel like the calendar is going to take a little while. Yeah. All right, Ron, break us out.
We're at over an hour in, so it's clear you like Volstars, and for that, we're thankful. Could you do us a huge favor, though, and be sure to give this a like and subscribe if you haven't already? It really helps us to get the podcast out to others, so we appreciate it. Thank you. Well, hey there, stranger. If you're enjoying this podcast, be sure to check us out on our socials, where you can hear the latest about Volstars and Gammastrike. Check us out on X, Blue Sky, and Reddit.
All right, we're back. Let's get into the calendar. So last week, I think the only thing worth mentioning from the previous week was CPI. I guess we had the GDP numbers, but we've already kind of talked about that.
Yeah.
CPI was in line, still a little high. Expectations were still high. Everybody still thinks it's 3% and above. Anything else you guys want to say about last week before we talk about upcoming week? Because there's a lot of stuff to talk about. So PCE was high. Core PCE still over 3. PC itself was 2.8. Sales were way down. So the GDP quarter over quarter estimate, sales were down, prices up, sales down, which is super bad. Personal income still held up 0.4 and spending was in line with that.
Yeah.
So it's kind of more of the same. Everything's still too high and seems to be leveling out too high, and nobody's doing anything about it. So let's
I
get into
mean, yeah.
this week. I think really everything's basically loaded onto Wednesday. I mean, we've got some jobless claim stuff on Thursday, but I don't think anybody cares. So Wednesday, we've got PPI, which has been hot for 2 months now, like very hot, which
Yeah.
are the prices that producers pay that they aren't necessarily completely passing on to consumers, although I think we could argue that point. But it's been much hotter than the CPI and PCE numbers that have come through. So it'll be very interesting to see if we get another month of that, which would be no bueno. We also on Wednesday have the Fed interest rate decision. And that evening, we have the Bank of Japan's interest rate
You
decision.
mean the Fed's lack of interest rate decision?
Interest rate indecision. Yeah.
Well, we've
Yeah.
got Trump going around, fighting them again, saying we need to cut immediately. You're already too late. Jerome Too Late Powell, is that what he calls him?
Something like that.
Yeah.
Do you think that the Federal Reserve is going to do anything at this meeting?
No.
Trump's been complaining a lot about cutting rates, but I'm looking at inflation and job growth and GDP, and it seems like cutting rates isn't having the stimulating effect that one would expect from such a vociferous hand job.
Was there somebody? There's
Vociferous.
somebody I think either on this podcast or that knows about this podcast that was saying that cutting rates would reduce economic output, not increase it.
We've said that.
Yeah.
Yeah.
We all came into unison on that a couple years ago.
We've
Yeah.
definitely iterated that here as well.
Mm-hmm.
We've been singing a chorus of it. Jay Fresh is now the biggest. He's the alto soprano or mezzo soprano
Mm-hmm.
of the chorus.
Yeah. What happens if you stop giving out a bunch of free, risk-free money at the front end? Well, you have to start buying it, I guess.
Go figure.
The Federal Reserve has now gone, they've increased their balance sheet a grand total of around $110 billion at this point. So it's kind of
And I
interesting.
want to say since because you're onto something, since that's not having the desired effect on front end liquidity, they might increase it more.
Yeah, that's what I was going to ask. Do you think that they're going to make any changes or make any comments about their purchasing? So I wonder, yeah, I'm interested to see, I think everybody sort of expects them to just stay flat, and certainly they could do something crazy there, but probably not very interesting to speculate on that. It's most likely going to be flat.
Mm-hmm.
Much more interested in terms of interest rates to see what Japan says that night. But it will
Japan
be
can't
interesting
do
to
anything either, right? Aren't they similarly trapped?
Yeah. But it'll be interesting to see if somebody. It's all about like narratives, right? Unfortunately, everybody's just trying to get everybody to
JPA's already
speculate the
hiked
way they
their
want.
rate a bunch.
Well, yeah, but it's not enough. Anyway,
So
there's going to be a lot of new speculative information that'll come out on Wednesday.
I feel like given the carry, the U.S. is just having 2 central bank meetings this week. One's for no rate cut or a big rate cut, and the other is like maybe we'll do a little rate cut or no rate cut. But the impact of the dollar across both like Japan hike or Fed cut is the same, which I feel like we maybe haven't talked about on here, but that's something to think about.
Yeah. It reduces the spread
Yep.
between JGB and UST. So, which once
All
again, the
right.
carry trade is derived upon the spread, but we've already beaten the carry trade to absolute death. But they both make their
Okay.
decisions on Wednesday, so it's relevant.
Have we ever talked about Japan pegging to the dollar?
No, that would be wild. I mean, that would be a little premature to talk about it now, wouldn't it be?
Well, Japan's not considered to be a country with weapons of mass destruction, and yet
Well, that's a fucking bazooka. No way that they're gonna fucking peg to the dollar and just collapse everything earthly. Fucking ANCAP. What if they chose chaos?
in what way does destroying all of the corporations in the world in one broad stroke make me an ANCAP?
And the fact that you want to destroy all the corporations in the world with one broad stroke. ANCAP as fuck.
ANCAPs they're into like what is it? Like corporations providing all of the public resources that a central government would provide. That's like their whole thing. Is like, oh, the
It's
private
got
markets
anarchy
can
in it.
do
It's
it.
got capitalism in it. It's basically you.
It's not. It's not. I love
Okay.
I almost
capitalism
did the thing and
and
then
I
the camera
love
zoomed in.
revolution. I don't love anarchy. I
You're a
like power
panican,
vacuums.
admit it.
I like power vacuums being created.
I
And then
forget who it was
filled.
that said that it's better to suffer 30 years of oppression than 3 days of anarchy or something like that. Who was that? I think it was
I don't know.
Ben Franklin said that. Something like that. I don't know. Ron, find Ben Franklin's quote on oppression.
Ben Franklin
being
said a
better
lot
than-
of shit.
He did. He was a
Yeah,
philanderer too.
kind of just ran his mouth. Yeah.
He was a
All
dirty
right.
boy.
I want to move on because we have something I'm very excited to talk about next, and then I will hand the reins over to you. But we are going to. So, for those of you who don't know, we also do a Thursday night roundtable discussion where we basically talk about Gammastrike, the platform, and answer people's questions and have conversations. And it's sort of intended to be like an office hours kind of format where people can come and have a conversation with us and they can ask a question and we can give them an answer and they can say, I don't understand. Could you explain this in a different way? And we can try to figure out which piece of it they don't understand, and then we can go back and further and see, try to fill in gaps. And so it's a very high, I think it's a high effort but high value endeavor that we go through where we really do a deep dive and meet people where they are, and all you have to be willing to do is show up. And so one of the things is we've been doing this for quite a while now, and a lot of the regulars who are part of this roundtable are getting quite sophisticated in their questions, and we're wondering if we've left some people behind. As the first, I guess we'll call them the first cohort, has kind of gone through the roundtable curricula, if you will. And so we're going to relaunch this starting this Thursday, and hoping to open it up to a broader audience. We're going to try to get it out onto more platforms. I don't know which ones we're going to get them on yet, so I will let folks, Ron and other folks on the back end, figure out the technicals and give that all out to you. But we are going to basically start over and start from the beginning. And this week we're going to focus on a particular page on our website called the Greek neutrals page. And so we're going to talk through what they are, how to use the tool, what the tool's telling you, what it's not telling you, and how you can use that to get a sense of how people are positioning in the market so that you might better position yourself in light of that information. So please, this will be Thursday night. It's normally at, what is it, 9 p.m. Eastern? We normally do it at.
Mm-hmm.
The time might change a little bit. Again, we'll post this to our socials, but keep a lookout for it. And please come ready to ask questions and come ready to be okay with not understanding what we're saying and just say, hey, I didn't understand what you said here. Can you explain that in more detail? Because that's the whole point of this is to go into a deep dive. And the people who gain the most from this are the people that show up and are not afraid to just be honest and say, I didn't get this, explain this in more detail. So we're hoping, more folks show up, people who feel like they've been left behind. This is a way to kind of get a clean slate and learn about the basics again and kind of work our way back to another cohort of people who have a pretty good understanding of how the options market works. So, all right. So with that, I will hand it over to Dork to finish us out.
Okay. So are we gonna try the new thing today, guys? Are you guys ready? Are you ready and willing and able?
Let's
We can
do
give
it.
it a shot.
All right, let's go for it. Okay, so we're doing the new thing now. It's called trading with Gammastrike. Basically, the whole idea here is that we're going to go ahead and come up with some trades that are responsible and, all that stuff. The whole idea is that we want to basically use Gammastrike, come up with a position, and from there, see how it performs at the end of the week, see who wins. Kind of like stupid bets, but they're like, educated bets. And it's just really meant to be a demonstration using the tools. And, you guys can see things in action. And plus, I know it's just another opportunity for Girk to be right. That's the only reason he signed on to this. So, yeah, that's trading with Gamma Strike. And with that, why don't we kick it off? I can go first if we like.
Do you want to hear my terrible one first that I had to come up with in like 10 minutes?
Yeah, what'd you got for us?
All right. So first, I went to the G-Scan tool,
Okay.
and I really like selling.
I hope you're posting
Covered-
screenshots of your journey.
I'm not, but I'm telling you, others can walk the journey using my words.
In your
I went to the
footsteps? What do you think, you're Jesus? Trade
No comment.
Jesus?
All right, no, absolutely not. So I went to G-Scan, and I looked at the breakout tool to see what stonks have gone up recently quite a bit, because I like to sell covered calls. And one thing that I saw that has done a fair bit of a breakout is Marathon Holdings, the Bitcoin mining company. I particularly hate these companies recently because they are all embroiled in buying and building out AI data center stuff. And so they're taking on a lot of debt and high interest, and they have to sell their Bitcoin to pay that interest while they're still building, waiting for revenue. So I don't love Bitcoin right now, and I don't like these companies, and I like to sell covered calls, and they just had a breakout. So then I went over to the volatility page, and I was looking at the 10-day and 30-day IV, HV, and skew. And one thing that I noticed that I don't really love is that the skew is pretty negative right now. I mean, that could work in my favor because it had a breakout. It does kind of look like people are positioning for it to go back the other way. But I don't love that larger negative skew, but maybe I can manage it. I do love how elevated the IV is relative to the HV. They're both quite elevated. So I like those things. There is some fruit. There's some IV to be sold. Then I went to the Greek Spy Strike page, and I clicked on expiry to look at Greek Spy expiration date. And there's a massive amount of OI expiring on 3/20. So this is March OPEX next Friday. And a lot of that OI are calls. And so I think that there's going to be a fair number of calls that are just going to get destroyed this week. So then I went and looked, how much money could I make decent money on selling a covered call, a bear call spread on Marathon for this Friday. And yeah, Marathon's trading around $9.32. I can sell a slightly in the money bear call spread, so a 9C, 10C for next Friday for basically a coin flip, 56.44. So I don't hate it. I wouldn't put it on its huge size, but for what it is, that's what I'm going to go with. I'm going to try to make, I'm going to risk 56 for a 44 return. And I don't love it, but I put in all the effort and I didn't want to do that again for another stock while we were recording.
Yeah. Well, so I did Roblox. I saw it on the exposure scanner. I forget what the exact settings were because I was flipping through it idly the whole time, but it popped up and I was like, ah, yeah, Roblox, that's a thing, and vibe coding and stuff, and it's down a bunch. So I went ahead and jumped onto the Greeks page for Roblox, and I saw that gamma neutral and delta neutral were both falling. Vega neutral staying relatively flat. Not a lot of interest. You can see the delta exposure has been steadily decreasing for the past year, or half a year. So I went ahead and said, okay, so this thing's probably just going to kind of chop around. Could go down a little more. It might see a recovery rally up to maybe around $80, $85, depending on where Gamma Max would shake out in the event of a rally. So then I went, okay, with that in mind, and considering this trade has to last 1 week, I said, all right, my risk profile is going to be somewhere in like a, let's just say to the downside about $5, upside about, $10. And then I built this weird little spread where I shorted the 50, well, short the 50, long the 55, short 50p, long 55c, long 65p, short 70c, and that created a sort of like a butthole of unprofitability. But also I looked at the volatility page, and IV is relatively elevated compared to HV, and so I thought there's some room for IV to go down. So my position is fairly exposed to vol, but with that in mind, IV is probably going to trend down, meaning that it's going to reduce the risk of my position. And in fact, it may improve profitability in a small range. So the whole idea behind this trade would be once it's up, maybe, you know, 10, 15% of the max profit, I'd probably take it. But if Roblox takes a big dumperoo, then I'm going to be doing okay. So that was that whole idea for that. Wasn't a whole lot of thought that went into it other than that, it's Roblox. It looks like it's going down. I just decided to do a little momentum trade with some defined risk. So, pretty small max. If this thing gets filled at these prices, I think that would be ridiculous, but I'm guessing max loss around $200, max profit 430 or something. And I was like, hey, you know what? That's a really nice dinner either way. So, either Mrs. Dork is upset with me about a nice dinner, or she's really happy with me because we're having a nice dinner.
All right. So, I mean, I picked a fairly easy one here, but I think it's moderately compelling. I went with Nvidia,
Oh, shit.
because why not? As some of you may know, and others of you may not, Nvidia has its GTC 2026 conference tomorrow. It begins tomorrow. This is a pretty highly anticipated event from Nvidia. They're going to be supposedly focusing on like new chip technologies and stuff. And I believe Jensen Huang is beginning to speak at 11 a.m. Pacific time for the keynote address. And then I think they'll carry on with other speakers after that and discussing some of their new and emergent technology. So this is basically a big sales pitch for investors. And I kind of wanted to see if that was having any effect on positioning on the chain. And so I went and looked at NVIDIA, and I noticed that Over the last session, 10-day skew started to pick up. It's been quite low. NVIDIA's been selling off recently in line with the indexes. But historic vol is dropping on the 10-day, and IV10 and IV30 have been picking up a little. So that's telling me that IVs are picking up and skews starting to flatten. There's some call buying going on. Calls are starting to price up, but still relatively very cheap, at least especially compared to like the last several months. And so I went out and I took a little gander at the Greeks by strike page, and I noticed that Delta at the 180 strike, which is a bit split between puts and calls, is pretty positive. Um, and there's just a little bit of negative gamma at 180, but overall gamma exposure on the chain has remained positive throughout the entirety of this sell-off. And so Nvidia's holding a little bit of market maker support. And then over on the Greek neutrals page, I noticed that Delta and Gamma neutral both declined on Friday with the drop in price, and Gamma max lifted a little. So the structure of the Gamma curve shifted slightly, and there may be a little bit more bullish Delta positioning. Options were a little bit more bought based on the skew adjusted assumption there. But total Delta on the chain fell off a little. So I was thinking maybe like some puts were closing out. And so I went and checked the OI heat map, and it did look like some calls had opened. OI on out of the money calls increased really significantly with a very large move at the OPEX 187.50 strike, and also at the 195 strike for what is that? That is May 15th. So the May OPEX also increased quite a bit. And then, several increases at, 185, 187.50, 190, mostly OI going up on out of the money calls. A little bit of interest in the money, but not too much. And I noticed that interest grew on out of the money puts, but I also know that skew flattened. So that interest is likely put selling. And so it does look like bulls are getting ready to kind of pivot price here. And I think based on the gamma structure, around 180 and out to the upside, they probably have maybe about $10 to $20 of range. And so taking all of that information, knowing puts are still priced up, knowing bulls are pushing for a reversal, and knowing the potential upside range, that tells me I want to probably sell some puts to finance my position. So I was thinking of opening two put spreads to the downside of spot, 180 and 175. Sell the 180, buy the 175. So $5 spread on the weekly put, and then possibly considering buying one call to the upside, which would leave me with a net credit of about $45 at Friday's close prices. And the potential gain on a test of 190 at 2,321%, or if it really moved and it hit 200, which I find unlikely, but it's possible. You could pick up like a 4,549% return. But really, I'm just hoping for kind of a bounce off 180. If that holds, and I don't get the 190 test, my sold put spreads will still make me money, so I'll walk away with $45. And if it really runs, and some of that news triggers maybe a squeeze or something like that, I can turn that $45 credit into a couple grand. So
Yeah. There we go.
Mr.
Ron,
Convexity
you write all
here.
that down? Yeah, right. You write all that down,
Nice.
Ron? You got it?
Ron's logging the trade right now.
Right.
Ron's just like, we're not doing this next week. This is more than I asked for. Girk, I like how you used, I think, actually just about every single end of day tool that we offer in that
Yeah, I
analysis.
mean,
That was
well,
nice. Yeah.
I built all the, well, I didn't build them all, but I designed a lot. All right. I wanted all these tools. So damn right I'm going to use them.
You expressed your desire for these tools.
I will say it sounded like you only implied what happened on the gamma curve. You didn't actually open it and look, but that's fine. Next time.
Well,
there
that's fine.
I did open the gamma curve. I did. It was, there's some positive gamma below
let me get a screenshot of that,
some
since you guys are too
market maker
fucking
support.
lazy to get your own. Hold on. There, I'll put the gamma curve in there too, so we can all look at it because it's shiny. There we go. Beautiful. Okay, why don't we move on to our next beautiful segment, which is where the beautiful viewers ask us questions. In case you weren't aware, you can ask questions from links in the descriptions for every single thing we post this on. We also make social media posts on all the major platforms saying, what would you like to ask us? Ask away. And holy cow, looks like we've got a few of them. We've got like a lot of them. So got a lot of questions about the yen carry trade. Let me see if these J likely to act. We already covered that. The pressure in Japan's inflation.
I should probably add one small thing. I do have a cutoff for that trade. If it falls below 177.50, I would cut the position.
Okay.
That would be the risk off point.
I think so. So I think we covered both of these yen carry trade questions. Thanks, you guys, for asking them, because we did go over them beforehand, and so they were probably top of mind. So I hope we covered them for you. If not, comment back, let us know if we did a good job answering those questions. Another question about the yen carry trade from YouTube. We got your carry trade update. So we got another person who has a very big question from Reddit. What about different 0DT SPX option strategies for high VIX, lower VIX, and bull bear markets? ... Playing around with credit spreads, butterflies, BWV, whatever that means, long call or long put, just everything. But often don't know what strategy to use on what day, and how GS can help me decide on what strategy to use. Still way up on the year on my DGen 0DT account, thanks to Gammastrike. This is a very, very how use basically question.
Well, I think it's how do you understand, I think the question here in essence is how do you understand what positions are most beneficial? You know, sometimes when we're talking about SPX, very specifically in Pickles Picks, I like my like nightly write-up. I tend to have kind of like a longer volatility section that I've been leaning on lately in order to kind of showcase all the tools that we have for volatility. But what I do in that is I try to tell people, you know, like what types of positions are going to best benefit the current structure of volatility, you know, because, and, you know, usually I'm focused on the 0DT, obviously, like that's what my write-ups pertain to. But sometimes I focus on the 3 to 5 day, or, you know, but short time frame trades. And, you know, by looking at, you know, the divergences in skew, the term structure between the 10 and the 30 day, by looking at historic vol relative to implied volatilities, you can define where, you know, puts are expensive, where long gamma is advantageous, where you might want to, you know, sell the near term option, buy the long term option, or sell the long term option with the near term hedge, you know, and depending on the structure of pricing of options, I find that usually that there's some advantage to be found in that pricing structure. And so in a high volatility environment like what we've experienced over the last couple of weeks, where we have, put skews bid up really, really sharply. You have low historic vol, but really high implied volatilities. And the intraday variance is going to be really high just because volatility is so massive on each 0DT expiry, which you can see like there when you look at our term structure that, basically there's always a spike on the front of wherever spot closes. Um, and understanding the levels in the market where, volatility is likely to crush or volatility is likely to be priced correctly. And then even more where volatility is going to expand and skew is going to steepen further. The understanding all of that can really point you kind of directly to the trades that you want to take. And I think it's really important for people to understand this because I think it was just really underutilized before. And we put all the work into making all these vol tools. So I figured it'd be really cool to show them off. And so I can give some examples. I mean, obviously, I can't answer all of these and like say what's going to be best in every environment. But, sometimes you have environments where realized volatility is extremely low, implied volatilities are very low. So long options are very cheap. And sometimes you get, IV below HV, where you have a negative volatility return premium. And when that happens, things like straddles can be very good over the like 1 to 3 DTE period, because it's very likely that at some point during the trading session, the intraday variance is going to exceed the way the option was priced. And so, by doing that, you're able to get directional exposure both ways. So, right. So you're agnostic to price direction, but you're able to capitalize on the fact that volatility is underpriced relative to the recent historic performance. In an environment like the one we're in now, I've been trying to encourage people to target important price levels, either psychological or like big gamma levels, like structurally robust options levels where everyone's kind of trading options with out of the money butterflies or condors, because volatility is priced so high that even though you're using a risk adjusted profile, the collapse in volatility would be so large that they can profit faster than they would in a low volatility environment. And it allows you to get out of the money exposure extremely cheap relative to buying an out of the money option with no other positioning whatsoever, without taking advantage of all of that volatility return premium that you can use to finance your position. And so, sometimes like I know a few days this last week, I was kind of showing people like you could sell like the out of the money butterfly for maybe like $100 risk, 10 wide at a specific strike. Maybe you pick like, a major strike like 6,700 or 6,800. And you assume that price action is going to be relatively mean reverting to that focal point. And you sell that money out of the option and you can make, like 9x returns on that risk. And so you're taking like $100 risk with potential for like, a $900 return on that risk, which in an environment like this, where an at the money option could be $2,200, that can be very advantageous, especially if you add leverage to it. And so that's
Balling on a
an
budget.
example. Those are some examples. Yeah. But obviously there's thousands of combinations of options that you can buy and sell and positions that you can manufacture, and the opportunity to leg in and out of options that can all change that. So it's like I said, too much to cover. My best advice would be like, learn all the different types of positioning arrangements, and then understand why they work the way they do and how they benefit you, and then play around with it.
Yeah, I would just say understand how these different types of structures, how they are priced, and what that means for people's expectations. And so you want to look for opportunities where you think people's expectations are not correct. Or if people are, maybe they are thinking that something's going to happen that's probably going to be correct, but they've just gone too hard into that one position and they've left open weaknesses in other places. So it's a lot of it is about positioning yourself relative to other people's positioning, right? Because this is a zero-sum game. Whatever you lose, somebody else wins. And yeah, so you got to look for those opportunities. And like, the examples that Kirk just gave are examples where, yes, people are positioning for something and leaving open weaknesses in other places. And you just have to identify those and then find a way to extract some value from that.
Bingo. I think you guys nailed it. So our next question comes from Reddit. Can you guys talk about aluminum?
I can briefly. If
It's
you guys
like-
don't know why. Wait, hold on. Why does someone want to know about aluminum right now?
Because it went up a bunch over the last year.
It probably
it?
did. But
Yeah.
why?
Uh,
Why? What's significant about it? Quizzing you guys.
I mean, just from like what perspective, like from a manufacturing perspective, it's like the
Why?
cheapest.
Why
most
specifically right
useful.
now would people be asking us about aluminum?
I don't know of what connection it would have with the Middle East.
It's the most used metal in defense contracting.
Well, it's the most used metal in anything. It's the cheapest
it's
metal.
true.
Yeah.
Well, is it cheaper than steel since we cut off the supply from Russia?
I think I'm trying to remember. I think on a per pound basis, it is one of the cheapest. It's very cheap.
Okay, well, it's heavily used in defense contracting, obviously, and the war in the Middle East is going to mean more missiles made out of aluminum, more planes, more equipment, more usage of aluminum, and we do have a structural issue with aluminum already in global markets due to the fact that the supply from Russia is effectively cut off with trade conditions and restrictions applied to them because of the war in Ukraine. This does generally conflicts drive the price of aluminum up. It's usually one of the lagging effects, after oil and the dollar and all that stuff. Aluminum starts to go up because, well, we have a lot of shipping issues already, and then this is going to probably compound all of that. And so I would expect that if aluminum hasn't, I'm not even going to look right now, but I would expect that aluminum has gone up and it will probably continue to go up until there's some resolution to the conflict in sight. Obviously, an extended war would put even more demand pressure on aluminum. But what can happen is after aluminum runs or aluminum prices up, and it gets that kind of structural bid behind it, you can start to see aluminum's, basically like 100% recyclable. You'll start to see aluminum recyclers pick up a lot of interest because, obviously they're recycling aluminum and then they're selling the recast aluminum at spot price. And so spot price is up, their profits tend to increase. I don't want to name tickers or anything right now, but you can go check out aluminum recyclers and see how they're priced relative to historic trends, and I'm sure some of them are probably a pretty good value.
Yeah, it actually looks like aluminum, the price has been more a function of the tariffs than the war, although it has spiked in recent days. But yeah, so in April 2025, shortly after Liberation Day, it was at a low of like 2,300, and now it's at 3,400 a ton.
Yeah, went up. It went about 10%. The 10% of that is of the recent move up was Iran goodness.
Yeah.
So yeah, it's
If you look back at the Russia-Ukraine conflict, as that escalated, aluminum pricing really moved up quite sharply to around like 4,000 a ton, I believe. So we could see that again if it's going to be deemed as, like this is a bigger conflict. It's going to be requiring a significant amount of defense manufacturing. If we see the government start to allocate more funds towards defense spending, Trump was talking about 500 billion more into defense spending. He's talking about a fleet of new warships. Like this kind of thing can really push the price of aluminum quite a bit. So if we ramp up defense production as a response to escalation in the Middle East, then yeah, aluminum can get a pretty strong structural bid and keep rising.
Well, plus I got to keep buying tinfoil hats for myself too. So,
I mean, aluminum is one of those things. It's like, I mean, yes, I guess all commodities are by nature of the name commodity, but it's in so much stuff. I think this just lends credence to the
but
fact that
when you're
if
talking
PPI
about
is hot again this month or this Wednesday, that's going to be a sign that these costs are about to explode for the consumer. They can only hold this off for so long.
oh yeah.
but JFresh, when you're thinking about defense building, which I'm sure you're able to do, when you're building like a fleet of warships, like destroyers, you're using several orders of magnitude more aluminum than you would be building data centers. Right?
Yeah, but also I don't know how much aluminum they're actually putting in those ships. Did you know, fun fact, aluminum is soluble in water.
Is that because salt water has gallium in it?
Doesn't even no, it's actually it's soluble in distilled water.
Oh, really?
It doesn't even need the salt. Nope. People have learned this the hard way by trying to make aluminum heat exchangers and running pure water because they don't want it to foul or things like that, and it will slowly eat away the aluminum. Yeah, it's wild.
Do you have to coat it?
Yep.
That's pretty interesting. Our next question
Did
comes
you
from
know-
Reddit. God damn it.
It's okay.
Here's
This is
I'll
aluminum
give you guys
trivia
a quiz. You
time?
go look this up. No, you can go look this up because it was fascinating to me. Go look up. Take a guess. How many days you think it would take for milk to fully dissolve a silicon wafer? And then go look it
God
up.
damn it. Okay, I'll look that up.
Don't do it now.
So our next question comes from Reddit. How can I hedge my retirement account? Current allocation 100% VU. Well, it's a pretty simple way to hedge it, which is switch to something other than VU with a little bit of that, or you could figure out your total delta on VU, how many shares you have, and hedge a percentage of that with puts. I mean,
if you're
this
just
is
U.S. index equity exposed, I mean, you're at the mercy of literally everything.
yeah.
So, I mean, you probably a balanced portfolio right now, in my mind, would have some emerging market bond exposure, some UST exposure, maybe some diversity away from just VU. I guess VU is fine. It's probably diverse enough, but and then some sort of dollar hedge. I would probably want some kind of dollar hedge.
Yeah,
And
100%
exposure
VU
to
is hard.
commodities. I would want some exposure to commodities too. There's too much geopolitical tension in the world and too much economic turbulence for me to not want to have at least some long-term commodity exposure.
yeah, but we're not financial advisors, and this is not financial advice. You should
No, that's like basic like portfolio building
yeah.
101.
But for
You don't go 100%.
Yeah,
Right.
this guy needs the crash
yeah,
course
but
on
for
that. 'Cause,
something,
like, he's
but for
just-
something as
yeah.
important as your retirement, if you really feel like you need some help with that, you need to get in touch with somebody who is going to be your fiduciary and have an obligation to ensure that you are making good decisions with a lot more information than just what your current allocation is, right? I mean, they
Yeah.
need to know what your goals are and all that, right? So
Yeah, how
it's
old are
almost
you? Like, no one knows
impossible-
anything about you.
it's almost impossible to
it
answer
is
this question.
impossible.
Yeah.
Yeah, you haven't given us enough information to tell you anything I think that's of any value. So, I
And
mean,
if you
sure,
did, we wouldn't.
Yeah, but we could
Garrick
talk.
about
We could talk
covered, like,
about
what looks
general diversification strategies and things, and you can decide for yourself whether that makes sense. But yeah, you need to talk to somebody who you know is like legally on your side and looking out for your best interests, which
Well,
is
you
not
can also
on
sit
the
down with
internet.
for an hour and get a one-on-one conversation about you, right? Like,
Yeah, what was
Or
that guy's
somebody who
name who
takes
would
all your
just
money
like?
and does it for you.
Yeah, what was that guy's name who would just like sit around and eat bagels and charge people $500 an hour to talk to him?
I don't know. We're not advertising for other people
Uncle
on here.
something. I don't. He's probably
Uncle,
dead.
shut up.
Right. I will eat a bagel in front of you for hundreds of dollars less than that.
Okay. This next question from YouTube. Teach us how to go short, long, and long short on oil futures. Also, this is 2 questions. Also, what are shipping futures and why is my future father-in-law telling me to get on board? Is that a pun?
Yeah, I was gonna say, is that a double entendre? Get on board.
I mean, if he doesn't know how to go long or short futures contracts, he should probably stay away from both oil
Well,
and
okay.
shipping.
Are we being trolled right? Are we being trolled right now to go
Assuming
feel like
short
we're
we
not
long and
being
long short?
trolled super hard, you can deposit the mandatory intraday margin or overnight margin for a oil contract on CL or the micro CL futures, and then you would just buy and or sell a contract with the money that you've deposited at your CME approved futures brokerage.
That was complicated.
No, it wasn't.
All right. Want to go on to our favorite segment of the whole show and get this thing wrapped up so I can
Is
make a
it
steak?
stupid bets?
Well,
I don't
hold on.
know.
We didn't
Let's
answer
find
the
out.
Stupid bets. Who's gonna win? Who's gonna lose?
I loved how you timed that perfectly to interrupt Jay Fresh's sentence.
Oh, God damn it. Well, at the beginning of the segment, we spoiled it. Garrick won the main leg. I won the parlay. Oil was closer to my price prediction than Garrick's. But Garrick was right. We were wrong. He's smart. We're dumb. He's the king.
Oil
We're the
did drop
peons.
back to 80 before going back up again.
That wasn't the bet. You know it.
I know. But they did try to taco their way out of it, which I did expect.
Man, we should. Okay, what's the stupid bet going to be this week? We should think about this more before we do this because now I'm like, we've done a bunch of Iran
How
shit.
do you
we
make
do
Kirk lose? Have I been on a
yeah,
streak?
right. We'll conspire against you to find something that you don't know, which is going to be really difficult.
Well, I would love to bet on the Fed increasing the rate of them buying bonds.
So
I
QE.
would say they're probably not going to do it yet. But if there's more stress at the front end, they would.
Are you willing to make a stupid bet over it?
Yeah, I would. I would make. I mean, this is a highly intelligent bet.
Well, then, is it right for the segment?
Yes.
Hmm.
All of our bets are both stupid and
I thought
far more
maybe we go
complex than
J-Pow
they should be.
Tricolor. Or do we
Purple.
do QE and then tricolor parlay?
No, the color's always purple. We've already
It's
done that
always
one.
purple. I mean, then we're fighting over the shade of purple, and I don't know if you're colorblind.
We already did a tricolor bet.
Okay, what about a
won 'cause I
stagflation
picked
parlay? Does someone
purple.
ask him about stagflation directly?
What do you wait? Hold on. Maybe we should bet on if J-Pow says stagflation.
Or
you think
transitory.
He'll say it? Stagflation's a banned word.
He won't say transitory. Not until CPI's up.
He'll almost accidentally say it though.
Well, I think he's going to say pressures on both sides of the dual mandate, right? The spit roast.
Yeah,
he's going to say that. He's not going to say stagflation.
And from the back.
Yeah, he's not going to say stagflation though.
I wonder if he says spit roasted.
Ooh.
This is the very highbrow Federal Reserve commentary people come here for.
Do you think
Okay,
they put
so-
spit roasted in the minutes?
Maybe with a diagram. This is the economy.
It's just J-Pow bent over a desk and 2 dual mandates coming at him from either end.
You got inflation, you got employment.
Yeah.
Okay, well,
That's the thing about the dual mandates is you got to go on 2 mandates at a time.
You got to do both mandates at the same time. That's what I do. Well, are we doing QE stupid bet? Who wants to go first?
I feel like it's not enough though. We need more.
We got a bet in a
Nuance?
parlay.
We can't
What's the
add the
parlay?
tie, man.
No,
We're
it's
not
not the
doing
tie. It's the stagflation parlay.
Oh, what if we make Bank of Japan the parlay?
Ooh. Yeah.
But what are we gonna say Bank of Japan does though? We gotta narrow it
Nothing.
down a bit.
Well, we're all gonna want to guess nothing.
Yeah.
Yeah.
I
This is-
want to guess nothing.
Well, it's a stupid parlay then, because okay.
Wait,
You know
hold
what,
on,
fine.
hold on. Is BOJ CPI numbers out that night?
Think so.
No,
No.
it doesn't look like it.
No, they got machinery orders though.
That's lame.
Hold on, let's.
Yeah, this is a lame ass parlay, dude. I like the stagflation parlay more. Even the spit roast parlay was more interesting.
Hmm.
Well,
We could do something with the dot plot.
now we're no. See, this the bet's getting less and less stupid as we go on. Let's calm down.
Ooh,
take
I'm
a deep
willing to
breath.
say that the Fed removes all rate cut chances from 2026 on the dot plot, except for Moran. He's going to bet 2 rate cuts at every session, and probably J-Pow too.
I still want to stick with the stagflation Freudian slip.
Let's do the stagflation. Let's just do it. It's less thinking.
Yeah, it's gonna be. Otherwise, I'm gonna have to look at a dot plot and actually have to think about it. And I think that makes for good content.
I'm going to say that I'll make this interesting. I'm going to say that the Fed is going to discuss moving towards quantitative easing, but they are going to they're not going to change their balance sheet rollover, and they're not going to hike rates, and he will say stagflation.
So you're saying no QE, but talks of QE.
Yeah.
And no
No
mention
QE,
of stagflation.
talks of QE, stagflation.
You're saying yes, stagflation?
Yes, stagflation.
Okay.
I'm going to say they are going to ramp up a little bit, but they're going to call it something else.
Okay. QE light.
Bringing the balance sheet into better balance.
Love it. Ample reserves or something.
Yeah.
Bolstering bank reserves.
Yeah. Something like that.
But he will not say transitory. He will not say stagflation.
I am going to say...
He will say a synonym of transitory, though.
Yes. I will say no QE or any flavor of it. Yes, stagflation, purely because the reporters are going to pressure him into saying it.
Okay.
So you and
There we
Kirk
go.
are very... So it's basically you two versus me with like a little bit of a nuance on...
We got the
I feel like mine's
parlay to
pretty
separate
nuanced.
us.
Yeah, do they discuss it or not?
Yeah.
What, QE?
But I'm talking like discussing actual QE.
Oh, okay.
Yeah. Like I'm not talking about like fucking around with the
Balance
balance
sheet.
sheet. Like actually
Yeah,
just
okay.
QE.
Oh God. Yeah.
Look
that'd
at
be
you,
wild.
Girk. Hardcore.
I don't think any of them even have the backbone to say the word QE.
Do I buy $100 out of the money call that day? Maybe.
You sick bastard.
Maybe I do.
You got those, Ron? Well, shit.
All right, let's wrap this shit up, man. Whew.
Yeah, let's do it. I'm hungry.